Want to invest in all of your favorite companies? Looking to grow your money and reach millionaire status with minimal effort? Well, what if I told you the index fund strategy allows you to do just that? The index fund strategy allows you to take a passive but lucrative approach to investing. You won't have to know how to analyze a stock chart or even read a company's balance sheet. Even the great Warren Buffett believes it is the best investing strategy for most investors.
We've had world wars, we had 9/11, we had the Cuban Missile Crisis, we have all kinds of things. The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline, never think about stocks anymore, just like you would do if you bought a farm. You just buy the farm and let the tenant farmer run it for you. And I pointed out that if you'd put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it amount to, and it would come to $51 million now. And the only thing you had to really believe in then is that America would win the war and that America would progress as it has ever since 1776, and that American business, if America moved forward, American business would move forward. You didn't have to worry about what stock to buy. You didn't have to worry what day to get in and out. You didn't know the Federal Reserve would exist, whatever it might be. And America works.
The index fund strategy involves buying index funds such as exchange-traded funds, ETFs, or mutual funds that track major stock market indices like the Dow Jones, S&P 500, and the Nasdaq. Index funds can even track international stock markets or bond markets. Although these indices consist of tens to hundreds of stocks, index funds allow you to buy them all at once and at a low cost. This is because ETFs and mutual funds are baskets of stocks, bonds, and other investments that you can buy as a single share. As an example, the S&P 500 includes 500 of some of the largest and most successful US companies. If you wanted to buy one share of every company in the S&P 500, it would require a lot of cash. Instead, you can buy one share of an index fund that tracks the S&P 500 for a few $100s. Without index funds, it would take thousands of dollars to build a truly diverse portfolio. Fortunately for investors, index funds enable you to accomplish this with a lot less. Another benefit of index investing is the low fees. Shown as an expense ratio, index funds can cost you less than 0.1% of your money invested annually. So now that you know what the index fund strategy is and why it is a great strategy, it's time to take this strategy to the next level. In order to maximize your gains using the index fund strategy, you should strongly consider choosing the funds with the lowest net expense ratios, buying these funds on a regular basis, and holding these investments through the ups and downs of the market over a long period of time. History shows this will allow your money to grow at the largest rate possible. According to studies, using this strategy often beats the returns of most professional investors on Wall Street. Now that you know how effective and simple index fund investing is, it's time to put this strategy to work and grow your investment portfolio. Also, if you're looking for more easy-to-understand investing videos, subscribe to the channel.